Hey fellow idiots, welcome back to the Wealthy Idiot Show. I'm glad you came. We've got some news to talk about because the market is going crazy. So I'm glad you stopped by. Let's get into it. Alright, I'm sure you've seen, or if you're an investor at all, you know at least a little bit about the craziness that is the stock market right now. Everything is falling, nothing seems to be going right, people are arguing on all sides as to what the cause of that may be, and nobody really knows what's going to happen. I made a video a few weeks back, maybe a week ago, talking about how right now is a scary time to invest because it seems like everything is dropping. If I buy and it drops, you just lost money. But I reassured you that right now is the time to buy. I bought last week, I bought this week, and I'll buy next week. I don't know where the bottom of the market is going to be. All I know is that I'm going to continue to buy as we continue to go through this bear market. And on the other side of this thing, we're going to see amazing growth. Now, when is the other side of this thing? We don't know the answer, but I've got some interesting stuff to show you, and I hope you stick around because we've got some good data. Before I continue, please smash the like button for the YouTube algorithm. Subscribe, leave a comment. If you know more or have other insights, it would be really interesting to hear, and I'm sure people would love to see it. So, something interesting that happened in the last day and a half, 2-ish days or so, is that Snap, like Snapchat, the social media company that lets you send things to each other and have no record of it, it dropped its value almost 50% in the last 2 days. In the first day, this was 2 days ago, 43% of its value was lost, and then yesterday it lost another 5 or 6%, I can't remember exactly, but we're almost at 50% loss in value for Snap. People are beginning to say that this might be an indicator for something bigger coming to the tech industry when it comes to investing. They're suspecting that a lot of companies are going to see some major drops. We saw some drops from Google, Facebook, Apple. All of them have consistently been going down since about the end of March. In fact, the entire S&P 500 has been declining since the end of March, and it doesn't look like it's going to stop anytime soon. So what is happening right now that's causing this to occur? Well, it's a combination of things. The first one is there's a lot of uncertainty in what's happening in the world generally. Investors get a little bit nervous when stuff is kind of inconsistent or we're not quite sure how things are going to work out. One of the big things that happened recently was China threatened again to invade Taiwan, and President Biden responded by saying that he was willing to use military force against China if that did occur. Well, that's not great. We get a lot of stuff from Taiwan, and we get a lot of stuff from China, especially in the tech industry, and if a war broke out between those two and we jumped into it, that doesn't look great for our economy. It's really going to put an impact on the tech industry. Something that's interesting is the infrastructure for making a lot of the silicone chips in Silicon Valley comes from Taiwan. It's apparently not incredibly easy to reproduce that process somewhere else. So it might take quite a while in order to reproduce that process in the United States or in another country coming out of Taiwan. It's one of the reasons why you keep seeing car prices continue to go up, even used car prices continue to go up, because there's just a shortage of chips that are available. Well, if a war broke out between China and Taiwan, and China wants those silicon chips so that it can take advantage of the market, supposedly, I mean, we're going to be in trouble when it comes to the tech industry for a while, and it's not going to look too pretty. So the uncertainty in that space is really causing investors to pull back. They're assuming that we're going to go into even more of a bear market, drop even further, maybe even a recession or a depression in this space, and they're going to move their money out of that space while they think it's still high enough. So they're going to move their money into things that are more secure, like bonds. So you're seeing a switch from major investing firms into things like bonds, something that's a little more stable in their mind while they wade this out until we start to see growth again, in which case they'll jump back in. What I'm personally going to do is what I said at the beginning of the video, which is I'm going to continue to buy. I'm not playing this game to show a profit every single day like a lot of the hedge fund managers are. I'm playing this game for 30 plus years from today so that I can show great net worth gains. So as the market continues to drop, I get that it's scary. It definitely hits my anxiety buttons too, but this is the time where getting in the market is really going to produce some major stuff. And if you have any kind of cash lying around, now's the time to figure out what you're going to do with it, because this is interesting. The other major thing that's going on is that the chairman of the Federal Reserve, we're now going to coin the term fairman, Jerome Powell, is continuing to promise to raise interest rates. He said about 7 more times just this year. Why is that a big deal? Well, banks get their money from the Federal Reserve at a really low rate to then add a little bit more on top of that as their profit when lending it out to people. So things like mortgages, businesses for new businesses, major businesses. So this is where it gets really interesting, because major companies like BlackRock or Charles Schwab or Vanguard, major investment firms, they get money at a really low rate from the Federal Reserve and turn around and invest it in things they believe are going to continue to grow higher than the rate the Federal Reserve is handing that money out for. So if you get a little, we've talked about this a little bit before, but this is called leveraging. You get a little bit of debt with a little bit of interest rate. If you're making more than that on top of it, then you're making money, and you can make money at exponentially higher rates than you could if you just use straight cash. So you're taking someone else's money, making money off of it, and paying them a small fee on the side. That's the way they look at it. So when it comes to leveraging, as long as you're investing in something that grows fast enough or has a good enough return, and as long as it's higher than inflation, then you're good to go. If your rate of return is lower than inflation, then you're technically losing money. As inflation continues to rise and the price of money continues to go up, we're starting to hit an equilibrium where it no longer makes sense to borrow money in order to invest it. And if we don't borrow money in order to invest it, we're not going to see growth. That's the intent of the Federal Reserve, however. So what the Federal Reserve is worried about is what's called a price spiral, a wage price spiral. That's where wages go up and prices continue to go up, and they keep kind of doing this until we get to a point where it's no longer sustainable and something breaks. They currently say that they don't see that happening, and they're going to raise interest rates at a level to try and prevent that from occurring. And so this is why they promise to keep increasing interest rates in order to kind of curb this inflation. The inflation doesn't look like it's slowing down too much, however. So earlier this month, Jerome Powell made a statement invoking Volcker, stating that we're not at a Volcker level yet, but that's not entirely out of the picture. What he means is that he's referring to the late 1970s, early 80s Federal Reserve Chairman, Paul Volcker. His theory was that you had to put interest rates above inflation in order to discourage leveraging and get people to deleverage, meaning that they're actually getting rid of debt in order to get into something a little more steady, and even cash in some cases. And if that's the case, then we'll see a slowdown of inflation inside the economy as less and less cash exists in the economy as people are deleveraging. This turned out to work out really well, except for that we saw mortgages above 20%. People were not buying homes, and it destroyed the housing market. You remember when we talked about Dave Ramsey? Dave Ramsey got a little over leveraged and was inside of the housing market until the housing market flipped, and all of a sudden he was in trouble, had to declare bankruptcy. Well, that's from this event here, as interest rates just took off and he could no longer afford it. So since Powell made these statements kind of invoking Volcker, he's walked that back, saying we don't think we have to go that crazy. But from an investment standpoint, how do we know Jerome Powell is just not placating us and making us feel better, as he just kind of hopes and prays that it works out the way he wants it to work out, and he doesn't really know? It's probably really likely. So a lot of investors are reading into this as the Federal Reserve is a little bit scared. They're going to keep raising interest rates, and as long as that continues to occur, people are going to kind of pull back, rethink their strategies, not be as aggressive, and kind of wait this out to see what happens. So as a result, we're seeing some crazy stuff happen in the market, like Snap losing 50% of its value overnight, and we're going to continue to see crazy stuff happen in the market. For me personally, I'm going to wait it out. I'm going to be very patient. We might constrict some of our spending here in my household so that we can put a little bit more into investments, and as we continue to drop, I'm going to continue to buy. I don't know when the bottom is going to be. All I know is that I'm going to make sure that I'm reducing my dollar cost average at every point that I possibly can, and try to get as diversified as I can across all of these different industries to hopefully, when this whole thing turns around and turns back into a bull market, I'm going to be sitting pretty. So that's our strategy here at the Wealthy Idiots. I appreciate you stopping by. I know it's a little bit crazy, a lot of uncertainty happening right now, but as soon as we know something and it changes, we'll be back on here to let you know. So please like and subscribe, and we'll see you guys next time.